Hi there, welcome back to Closing Trades. Last 30 minutes or so left of trade. Let's now welcome on board Shivangi Sarda of Motilal Oswal Financial Services. We also have Sunny Agarwal, Head of Research Fundamental Desk at SBI Cap Securities, joining us. Good afternoon to both of you. Shivangi, I'll come to you first. Given the kind of moves that we've seen over the course of the weekend, especially today, fueled because of these West Asian tensions, give us an idea of where we can expect our markets to head over the course of next week and what market open on Monday could look like.
Very good afternoon. Thank you for having me. So we've seen that, of course, global tensions and geopolitical concerns have dampened us at the opening levels. But from the opening tick itself, we saw that a good recovery was seen right till the end of the session today. And even though on the weekly basis, we formed an outside bar, which indicates that, the Nifty did catch a new high from the previous week, but it failed to hold at those levels. So some sort of pressure is intact, but overall support-based buying is quite strong at this level. So even though we're a little bearish, but of course there is a lot of optimism around at this level. So now, till the time Nifty holds above 24,442 mark, which is an important level here to watch out. Some strength and pullback move could be seen towards 25,000 marks, which is again a psychological level. But a hold below the same could see some, near-term structure changing and some more weakness or profit booking. But till the time it holds above 24,442 marks, it looks quite good, and this bounce could be played into. So this is the outlook for Nifty. But of course, Bank Nifty, we're seeing some bit of more pressure here. We've seen that this index has been facing profit booking from the last 4 continuous trading sessions. And today, even though we've managed to hold above 55,500, we're barely above it. And, some sort of pressure can be seen in the heavyweights, which is causing some, range-bound move here. But overall, volatility is more expecting in Nifty.
Okay, that's what one is anticipating when it comes to the markets. Just want to check in on what the India VIX as well is up to and whether or not you're seeing a spike coming in there or not. Yeah, a 7% move is what you're seeing. The India VIX now at 15 plus levels. Kunal, where do you think the India VIX is going to go? Today, of course, it's seeing a spike up, but does it seem like it's a sustainable move?
Yeah, today's move is more like a natural move because the markets are coming into that phase that yes, risk is now there in the markets. All the events are out, but still, with the kind of news flow surrounding across the globe, there's bound to be some adjustments over there. But I don't see this as a major spike in terms of the India VIX unless the scenarios across the globe or the news flow across the globe, it starts to, worsen significantly. So, there's an initial pop or an adjustment into the VIX where the markets suddenly braces for the kind of news flow surrounding. And then once that gets priced in, we expect the markets to remain more or less into a stable territory and the VIX, trading at a much higher zone. So we were almost at 13.5 on the India VIX. Maybe I think we should settle in the range of 15 to 16 over the next couple of days. So I don't expect a major comeback of volatility for the India VIX as such, but I think 15 to 16 should be like a new normal for the India VIX over the next few days.
Sunny Agarwal as well on the show. Sunny, hi, afternoon. What is it that you're making of the market? Well, of course, today seems like more a synchronized global knee-jerk reaction to all the developments in the Middle East. But does it seem like we could weaken further from here?
Good afternoon and thanks for having me on the show. I think, again, we continue to remain constructive on overall equity market. The reason being that India's macro is on a very strong footing, and at the same time, with the recent boost by RBI in the form of 50 basis point rate cut, coupled with a consumption booster given by Government of India in the form of a tax breather during the budget, we feel that in terms of earning growth, many mid to small size company, or in fact few sectors can report a very healthy set of earning growth during the Q1 or Q2 of FY26, and hence we continue to remain selectively bullish on market. Any dips can be an opportunity to add quality stocks in the portfolio. Case in point, within BFSI, NBFC as a sector, we feel will be one of the key beneficiary, wherein on the liability side, all the repo link as well as MCLR link funding book will see a 50 basis point kind of saving on cost of fund. So that will be an added advantage for NBFC. And within that also housing finance as a company and housing finance as a sector, which we like more because most of the mid-sized housing finance company has got a kind of fixed rating kind of portfolio. So that will be an added advantage for them. So again, continue to remain constructive. Buy on dip is a strategy which we feel should be adopted in this current market.
Okay, so buy on dips is a strategy, but Sunny, help us understand what you're making of the broader end of the, pardon me, broader end of the market right now, because they are also in the red, but they've not fallen to the extent that the benchmarks have fallen. Do you believe as and when eventually when the recovery starts to show once again, it could first seep into the broader end and then towards the benchmarks?
Yeah, definitely. I think the market continue to remain a stock-specific bottoms of growth stories are something which will always find a buyer at every deep. So, as discussed earlier, a few selective name, case in point, Time Technoplast, where we feel that earning is likely to grow at kind of compound at 15 to 18% CAGR during FY26-2027 period. So again, I think even if you look at earning construct, most of the mid and small size companies are reporting a very rock solid kind of 15 to 16% CAGR earning over the period of next 2 years. So I think broader end of the market is where you can find identify more winners rather than looking for some in the benchmark or frontline indicators.
Okay, so well, that's the take on the broader end of the market as well. Shivangi, I want to get your sense on the market churn that we've seen off late. It's surprising today how IT is holding up much better than its peer indices. What are you making of Nifty, IT, and a lot of these names over the course of the week, though they're not doing all that well today? Something like a pharma, for instance, they have been showing some signs of recovery. So what are you making of some of these sectors that have not done all that much over the course of the last couple of months, but now are showing some signs of optimism?
Now, of course, coming to Nifty Pharma first, we've seen this index has been, quite a high beta one and quite volatile to news sensitive action as well. But talking about Nifty IT, there has been a good comeback in most of the stocks today. In fact, both heavyweights and the mid cap stocks are doing quite well. There has been good amount of long addition on a consistent basis in most of these stocks. One of the stock which is on my radar is Tech Mahindra. This has done consistently well from the last 10 trading sessions, and we've seen a gradual amount of volumes being added, especially in the last 4 trading sessions. So higher highs formation here, base is also shifting higher, and it has surpassed its previous hurdle zones of 1640 levels. So clearly, this one has been a clear outperformer in this kind of a market, and I'm looking at this for the next potential targets of around about 1750 levels with a support of 1630 levels.
Right. On the other hand, Shivangi, I just want to, address some of the other names. Look at some of these small banks. I mean, to think of it, the journey for them just about started, right? The rebound when they started playing up on, or rather catching up with the large cap banking names. Canara Bank, Union Bank, for instance, or some of these capital market plays like an Angel One or BSE. What's your reading on the chart?
So definitely the smaller banking names have got attention, and we've seen that there has been good recovery today, be it Canara Bank or RBL Bank, or for that matter, some of the PSU names as well. But of course, Bank Nifty has been in some sort of a lackluster move, which is causing some, range-bound movement here as well. Some headwinds from the heavyweight banking stocks, which is causing some sort of lackluster here. But of course, some of the financials, NBFCs, and the exchange-related counters are also some spaces which are looking quite positive. Now, if you look at MCX today, there has been a lot of open interest activity which has happened today, and a comeback after the last 3 trading sessions as well. So definitely this one's on radar. Even BSE has come and recovered and managed to hold above the opening levels today. So overall, this entire space looks good, but there is some sort of follow-up action which is required for the momentum to regain here. Of course, positionally, these stocks are really well, but trading, one can watch out for this for an immediate action. But of course, wait and watch and do not carry, much for the weekend.